No problem. We're all good?
Good.
So Michael, going to start. Michael, please take it from here and we'll continue
Okay,
later.
everyone. Hi. 7 p.m. here in Toronto on Thursday. Thank you so much for coming. It's our second webinar in a series of webinar we do for you. We want to share knowledge in this not easy environment, those difficult days. We want to help, to assist as many people as possible. So we do our best. We're going to share the knowledge. And as you can see, we're going to invite special guests to our meetings as well. So you can hear from different people with different experience in the real estate world. So I'm about to start. I'm going to those who do not know us, just like last time, I'm going to do 1 minute brief introduction about CFP Group. I'll tell you who we are, what we do, and then I'm going to share some information with you, and then we're going to go into interview with our special guest. So to those who do not know what CFP Group is, we're a Toronto-based real estate investment company. Combined, we've got more than 25 years of real estate investing experience. Now, if you include our partners, we go well over 100 years of combined experience between all of us. If any of you want to see the projects we're currently working on, there is a link, and I'm going to share this presentation with all of you. We've got more than 70 investment partners from 6 countries in different places in the world. And we offer different type of services such as project sourcing, consulting, financial structuring of deals, as well as coaching and mentoring. On top of that, we established a community of investors. It's called Investors Inner Circle. At the moment, it's Toronto-based. We do quarterly meetings, and if you're local, or if you're willing to come to Toronto to one of our meetings, we'll be more than happy to see you, to welcome all of you. We just had one in the beginning of March. If the conditions permit, we're going to have the second meetings in June. Okay, and now I'm going to go straight to the information. So today I wanted to share some I cannot say good news, but let's say positive news. Because if you want to hear negative news, you can turn on any TV channel with any news channel on TV and radio. Today I just wanted to provide something positive we can probably look forward to. So what you can see on your screen is this is the information taken from the website called World Info, and this is what I wanted to share. Number one, the table represents the amount of cases of COVID-19 around the world, and this is as of this morning. As you remember, China was the first country that got hit by the virus, and they started reporting the cases around mid-January, probably January 22nd. This is when they start the counting worldwide. So, as you can see here with my arrow points, yesterday they announced 35 cases, and I've been following this information for past several days. The good news is, number one, the number of cases are decreasing. Number two, they do not have any local cases, meaning all the people that are reported in these tables, they actually travelers that came back to China from somewhere in the world. So this is very, very encouraging information. And the second part is most of the people here in this call or the webinar are from Canada. So the country we can compare ourselves to is South Korea. As you can see in the table, that's sorted by amount of the cases. We almost have the same amount of cases. Obviously, in Canada, it's still increasing rapidly. But the good news that in Korea, we can see that the amount of cases is actually decreasing. So there is a period of time, and if South Korea could be a good example, as well as China, by the way. So there's several weeks of big increases, and then situation improves. So what happened, Korea was the second country that got hit massively by COVID-19. And around February 2021, they started announcing the big increases in numbers. As you can see on the graph on the left, the numbers were increasing up until probably the first 10 days of March. But then there is a steady decrease of amount of active cases. obviously not out of the woods yet. They're reporting the cases almost on a daily basis, not almost, on a daily basis. But you can see that from March 12, 13, there is no increase in the amount of cases. Now, people also get healthy, after some period of time. So there's no more disease in the body, and there's no more virus in the body. So the amount of active cases is actually decreasing. And this is a very, very good sign for us. So hopefully it's going to be same for all other countries around the world. Let's just wait and see. In North America, we started seeing big increase around March 8th. So if we go to follow this trajectory of, let's say, between 4 to 6 weeks, we're just hitting the week number 4. So there's still time to go, okay? So point number 2, economy and market reaction. This is from today. This is from this morning. And as you know, basically the economy is stalled. People just do not go to work. This morning in US, they announced that there's new jobless claims amount topped 6 million. Last week, it was 3 million. This time it's 6. I mean, it's devastating amount of people that cannot go to work, actually. But look above. See how the market is reacting. You can see that all the 3 major indexes in the United States were positive today, as well as in Canada. So the market seems to be absorbing this information. And all the bad news that happened previously probably are being reflected in the market and in those indexes. So not out of the woods yet for sure, but we will seem to be ready or understanding the current situation and looking forward to the end. So these are the major indices. I took the Dow Jones, which is one of the major 3 in the United States, and the Toronto. This is as of noon today. You can see that there was a big drop in both, and the down point here on the left side and on the right side was in mid-March, and the markets actually bounced off the mid-March lows. All I can tell, it doesn't mean anything yet. Okay, we can go back and test the new lows, and that was the case in 2008, 2009. So those who remember the previous recession, we hit the low in the market approximately end of November 2008, and then the market went up. And in the beginning of 2009, it went down again. It actually bottomed on March 9 of 2009. So all I'm saying is we got a bottom right now. Let's see how the market is going to react, but looks like they absorbing the news, and hopefully it's going to be positive from now on. Number 3, there's plenty of money out there. This is the news from this week. Actually, what happened is many companies actually looking to borrow money because the business stopped, and they want to be able to pay the debtor. So I just took an example of a company called Carnival. So Carnival is the world largest company, world largest cruise company. And obviously there are no more cruises since mid-March. So they need cash. So what happened basically 2 days ago, Carnival announced that they're going to they need more money. So they announced an offering to bring $6 billion with B. And they said they're going to divide it into 2 parts, actually 3 parts. Part number 1 was $3 billion of bonds, which meaning they're going to borrow money. Then was some $1+ billion of senior debts. Again, they are going to borrow money. And then they were going to issue more stock. Now, because they were not sure, how the market is going to react to that, they said they're going to do it in both in Europe and in the United States. So as of yesterday, there was so much ask for to be a lender to Carnival. So they were able to get, instead of $3 billion, they were able to get $4 billion of lending of bonds just in the United States alone. So what happened, actually, they decreased the amount of shares that they're going to issue from 1.25 billion to $500 million. So what does it tell us? Number 1, the big money, they view the economy that actually is going to rebound. So the Carnival, among the other travel stocks or airlines or hotels, was hit very, very hard. So the big businesses or big banks or big lenders are not afraid to lend the money to them. Now, don't make me misunderstand me. They get 11.5% for the money they actually lend, but they're not afraid to lend the money to the struggling businesses. That's number one. Number two, there's so much money available that's sitting on the sidelines. As you can see, they were able to get $4 billion in pretty much 24 hours. That's very encouraging news. So meaning there is money around, there's money looking to be deployed. And number four, and this is something very, very unique. This is the picture that we received in the beginning of this week. It was taken from one of our projects in downtown Phoenix, an office building. So beside us, there is a Hyatt House Hotel that was scheduled to be built and actually started the construction this week, right? And if you ask why, well, the hotels were being hit so hard, why would they do it? Well, they're looking forward. It will take about, let's say, between 15 probably to 18 months just to open the hotel. And by then, we all hope is everything is going to be over. So for now, yes, the travel industry is down, but looking forward, businesses, they're looking forward to see, and it looks that they're pretty much sure that everything is going to be okay. So these are pretty encouraging to all of us. And that's what I wanted to share with you. So as a small conclusion, this is the famous quote from Leo Tolstoy, the famous Russian writer. The two most powerful warriors are patience and time. And this is exactly all of us, what we all need. Let's settle down. Let the panic be over. Let's see how the world copes with the virus. And hopefully we're going to be back this summer when the temperature rises. You know, the viruses typically die in hot weather. So I hope that's going to be the case with COVID-19. Obviously not the doctor, but we just need to wait out, be strong, and look forward for the good times. So that's it for me. And we're getting to the second part of the webinar today. And it's going to be the interview with the person I respect a lot. Actually, there's two people I respect a lot. So I'm going to introduce to you Ronnie Bekovsky, my partner and my mentor, and it's somebody who mentored many, many people, actually more than 200 people in Canada. And I also would like to bring Larry Miller, is one of our partners, is an amazing person. There's so much experience he can share with us. He's been through many ups and downs of real estate market. And I just advise you, just listen to this amazing conversation of two very, very smart people. Okay? So, Ronnie, it's all yours. I'm going to bring the cameras. I'll stop sharing the screen.
Thank you.
It's all yours.
Thank you. Thank you very much, Michael. Again, applause to Michael for always very informative presentation. As you can see, he's the graph and number guys. He's the engineer. So he likes this stuff. He follows it, and he provides good information. So thank you a lot very much, as always. Now, good evening, everybody. Thanks for sharing your time with us tonight. I know it's very important. There's a lot of information that's being circulated all over, and Michael touched on some of the information regarding the pandemic, regarding the money market, etc., etc. What I think is happening is important to focus on is really to get the noise out of the way. I took the time to really get better in so many things, and I listened to a lot of webinars. Everybody's putting on webinars, and I don't like to say it, but there's really two types: the beginners to medium, and then the advanced ones. So if you have a lot of free time and you're not working, don't spend your time with the beginners, because it gets tired. I don't need to know how to do things. I don't need to understand another formula. Just don't talk to me like that. Let's talk in a bigger conversation. I attended a seminar yesterday, a webinar of Family Office Club, and there were about 600 people from many countries in the world, from Saudi Arabia to Europe to Asia. They're not talking about the pandemic. They're not talking about the statistics of would it go up and down. They're beyond that. They're saying, okay, great. We have our billions. We're sitting on billions. What's next for us? So they're planning now, learning the market to be able to take action immediately when either a cure will come or the graph will go down. They're beyond that conversation. So you know what? I want to learn from that. Say, because if we think it's not going to be solved, let's not talk about anything. If we believe it's temporary, 4 weeks, 6 weeks, 8 weeks, 12 weeks, who cares? Let's just learn, get better. We had another conversation with another group that just opened a hotel 6 months ago, and they're down from 90-something% to 20% occupancy. First thing, they talked to all their lenders in all their portfolio. Said all the lenders automatically told them, let's talk between 90 to 120 days down the road, no problem. So when big money acts like that, everybody know the boom is coming back. The boom was there before, let it settle in, let's come back. So let me talk about why I want to talk tonight about the US. The US and Canada is really intertwined. Two markets that are living together. 80% of the export from Canada is to the US. So although we want to be independent, we're really dependent. So whatever happens there influences us in some way, shape, or form. The two economies are really tied together. And I think to bring local knowledge is key. We can talk, generality as much as we want, but CFP Group, what we're doing, we have projects in specific markets and specific industries, and whether it's geographical from Toronto up to 2 hours, and specific strong market in the US, and Arizona being the strongest one that we chose. So I think it's very important to bring local knowledge that can really educate us and tell us, okay, what's really happening on the ground and what's the outcome. For something there are answers, for something there are not answers. We have to wait and see. So let me introduce Larry. Larry was very patient in last 18 minutes listening to us. And I thank you, Larry. So I will introduce Larry, and then we'll do like a Q&A session. I have a few questions that I wrote down. We'll have a conversation as we go along, and towards the end, everybody will have an opportunity to ask questions, and Larry will answer them. So Larry has many attributes. A few accomplishments include having over 25-year experience of developing master plan communities. Now, for those of you who don't know what master plan community is, it's not 5 or 6 or 10 houses. These are hundreds of homes in large pieces of land. So this is very complex development. He has developed tens of thousands of lots and built himself, under his construction company, thousands of single-family homes in over a dozen master planned communities. Larry started the construction company in 2002, and within 5 years, he became the third fastest-growing home builder in the U.S. Itself, starting from zero in 2002. He was a premier Phoenix MSA residential builder in customer satisfaction. And Larry, what I like, we met over a year and a half ago, and we immediately hit it off because I see what we call tachlis. Tachlis in Hebrew, it's like, let's talk straight shooter, right? Let's not talk around and everything. He says, time is money. Investor money in and out fast. Construction in and out fast. He was the fastest home builder, and he told me once, within 143 days, between the contract was signed until the buyer got the keys. This is speed in home building construction. So we understand construction, and I said infrastructure, and understand big business and big money. Currently, he's in process of entitling over 1,000 units in the Valley, in the Phoenix area, and developing and building several subdivisions for entry-level housing. I think Larry will tell you later, he identified the entry level as at the next golden goose, because Americans have money, they have financing, and they just need more homes to be built. So this is generally about Larry. So Larry, again, we thank you very much for joining us tonight. We really met over a year ago, and as I said before, we saw eye to eye. I'll add a few personal words, as I've been involved in real estate for over 15 years, and I saw a lot of good, bad, ugly, both situations and people. Real estate is big money, and big money many times have big egos, and big egos not always care about other people around them. And finding people that have big egos, it's okay, but know how to contain them and work with them and appreciate everybody's around them, it's really rarity in our business. So Larry, thank you for allowing us to come into your business and be part of you. And I know you feel the same. And I see our partnership moving on for many, many successful years. So as a developer of many years, you've seen quite a few ups and downs in your career. So let's try to achieve a perspective on how the economy would look like in, let's say, 6 to 12 months down the road, because that's what usually happens after crashes. So let's start touching a little bit on the pre-COVID pandemic crisis. You've been in the Phoenix market for quite some time. So what basically led you to that market to start doing business in the Phoenix area?
Good topic. First of all, thank you, Michael, for the comments, and also Ronnie for your comments on my past, and we're very proud of what we've been able to accomplish in the past, but it's the past. It happened, it's over, and it's now next. So talking a little bit about the market, why I came here, there were major reasons why I thought Phoenix would be a great market long-term to come to. And having come from California, Northern California, there were interesting differences between the value of housing there and the value of housing here. And one dynamic that hasn't changed much is that people can sell a house in Silicon Valley, put a bunch of cash in the bank, move here, pay cash for a house, still have a bunch of cash, and a job that's almost 90% of what they were getting paid for in Silicon Valley. And the weather, 3 months of the year is a little hot. In Silicon Valley, from October to March, it's rainy, cold, and wet. And I used to think it was the best weather in the world until I moved here. I was totally brainwashed. And a lot of people also are brainwashed that the San Francisco Bay Area is great weather. It's not. I mean, I love it there, but it's just not. So people move here because it's a lifestyle change. They can put cash in the bank selling a house, or even moving here with a job, and your cost of housing is so much lower, there's a lot more disposable income. So that's a big motivation. The bigger picture, and about a third of the people moving here, by the way, are from California. But a bigger picture issue is that employers like it. And they like it because there are major colleges here that produce a very educated workforce that love to stay and work here. So they've got people to work in their companies. And it's a huge retirement spot, of course, because of the weather. There were also a lot of mining concerns. There was a lot of copper mining. There was a lot of citrus growing. And for the most part, the reasons why people come here are maybe one of some of those, maybe a couple of them. And it happened really well that other parts of the country also realized Phoenix weather was great. A good friend of mine was sitting in Chicago watching a football game here in Phoenix at the Super Bowl. And he said, my God, I've got 12 feet of snow outside. Look what we've got weather-wise. I'm moving to Phoenix. So it happens a lot. People get the idea, they understand, they move here. And when I came to Phoenix this last round, friends of mine lived here and were connected to a lot of business and told me in the summer of '93, Larry, get back to Phoenix. The market's going to change. And by golly, it hit a long upward swing in the business of master plan, communities, real estate. And it just took it by surprise. And it grew to such a big project for me that we became one of the largest master plan developers really in the West Coast. And with that background, I got to see the reasons why people move. I got to see the incredible building of homes that were here, and the dynamics have happened with the jobs. And one really interesting fact is about 27,000 people touch something to do with building a house. So if you have that kind of dynamic happening in the Phoenix market with a lot of home construction, it creates and breeds a lot more jobs all the way through. So the very activity of home building helps breed more growth and more demand. And that's what happened. So I think in the last 6 to 12 months, except for the coronavirus issues, we've been on a very steady increase in absorption of homes being built, in demand of homes being built, at about 25,000. At the peak here, we were selling 65,000 homes a year. So it's a big drop back. Now, it isn't that the people in the Phoenix MSA only need 25,000 homes, and that's because the apartment builders are supplying the balance. Another 14, 15, 16,000 apartment units per year being built. And it's still, some say, not enough. And we think that this temporary blip of the virus pandemic will have a solution. We'll find relatively quickly, I'm sure, an antidote to the virus, and people will start changing their opinion about getting back in the market and hiring, and hopefully more deaths won't occur. And I think that'll happen relatively soon. I've got some people that think they know what's really going on, and they've told me this will happen really soon. And let's hope it does happen for everyone. So
well, I think, if you look at Trump, it's already over, right? For some people.
Yeah, the Mr. Optimistic guy. Well, they have been talking about a cure for it, and I think they're close to it, but let's see what they say.
Right. Okay. So thank you for this. And from what I saw, at least in the last 3 years working in the market, we saw really all the things that you mentioned are being pushing everything forward. And this is very low vacancy on the rental side, very affordable price range. And I think it speaks to why people are moving to Phoenix. And you mentioned the employers, which is very, very important, because if people are only moving for retirement, okay, it's some growth. But if employers are moving in, this is 40 years of people employed in their companies, and having a very low vacancy, very low unemployment, really speaks to that employers are actually moving in. And as you said, there are not enough people because they can hire more people. And these are all good signs, and you told me that it's at least a 5 to 7 year span moving forward this environment. So we really hope that this market will come back soon. But let's talk about what's happening right now, because the economy is great, booming and everything. Now we're in the middle of the crisis. What do you think the short and long-term concerns would be with the economy, with real estate, comparing to other corrections that you've seen in the past?
Well, I think this one has been much quicker and more decisive than anything I've seen in my life. It's like being at war, and we all, I think, feel the same thing. And so I call it the ripple effect. So the people that don't have jobs today from the service industry, who are renting B and C grade apartments, aren't making their payments. That landlord might not be able to make his mortgage payment, and it kind of ripples. And so we'll have a ripple effect from this crisis. If it gets over sooner than later, it won't be so damaging. I think the $2.7 trillion stimulus package that Trump passed through will really help. It will give people 2 to 4 months of runway to help get back on their feet with things that are happening. And the economy will have to come back slowly. It won't happen overnight like it dropped, I don't think. But people are still here. They don't disappear. They need to spend. They need to eat. They need a job. And I think it will get back relatively quick, in my opinion. Okay.
Now, the real estate, as you said, it's a very large part of the economy. Here in Canada, it's even more. I think it's over 25% of the GDP is related to real estate activities, which is huge. Now, in the Valley, it was very difficult to find construction guys in the last few years. And after the subprime crisis and everything, people went back and didn't come back to the trade. And I met a lot of builders that said we could build because we can sell them fast. We can't build them fast enough because we don't have the people. Do you think that because of this temporary 4 or 5 months, what we're going through right now, the market will come to a stop and people will go elsewhere, and there will be more demand for a construction worker? And if yes, will it create pressure on the prices and will go up faster? What are your thoughts on that?
I don't think that will happen necessarily, because the people that aren't working now because of the crisis don't really have other places that they can go and do the work also. And it's absolutely one of the essential businesses. Entry-level home building is essential, so those people are still working. But the supplies are short. You don't think about that. You have to get the supplies to build the houses, and those people might not be so essential, and it makes it more difficult. In the past, Arizona passed a law that really got tough on illegal immigrants. Those were your framers, your concrete, your wall builders, your landscapers. So we lost a lot of trade people because of that, and it increased prices. Back when we were doing our home building company, we could build for mid-30s per square foot. Today, twice that.
Really? Wow.
I mean, we literally were delivering for $32 a foot, all in, 1,200-foot homes. And the prices continued to escalate. It got higher. We were selling $1,350,000 homes on 1 acre lots in East Mesa for $1,350,000 building for $56 a foot. And they were real profitable for us. That was then. Today, we're building entry-level housing with good finish for $64 a foot. And trades are tough to get. We're lucky we have good contractors, good subs to work with. And yet it's still a limiting factor. KB Home is limiting the number of homes they're selling in certain subdivisions. They're limiting selling them because why sell it now at a price today if we wait longer at a worsening price and we can't deliver it anyway? So they're selling to their delivery schedule. Very unusual. And I think that's life today as it is.
You know, it reminds me a little bit of, we had a boom, an oil boom in Alberta in 2004, 5, 6, and then collapsing. And there was a time, the vacancy rate was negative almost. The employment rate was 120%. Everybody from all over the country went there, and people in the oil sands would drive a tractor and make 120 grand a year. And builders at some point lost money because they pre-sold houses, and then everything went up dramatically, and they ended up losing money. And then they put up home for sale, said, listen, you commit to buying the house now, but we're going to tell you the price only the day we'll start building, to avoid it. So as a buyer, you're buying something, you don't know if it's going to cost you $500,000 or $600,000. So it's kind of what you're telling me that's happening right now because of the shortage of labor. So it's interesting. And you having contacts with being in industry for such a long time really makes it easier for you because you can plan. I know you have a few subdivisions that you're already doing, and if you couldn't commit to the numbers, that would be a problem. Not a good place to be, I guess.
Yeah, our problem today isn't the escalation of the price so much as the missing out on the price increases to sell the house. So
right,
a little bit more of a strategic thought process than losing out. But yeah, it's actually getting a little bit better, I think. But it's not going to change dramatically. I don't think we'll have a real increase in prices. In fact, lumber has come down now strategically because there's an oversupply and a lot of construction is slowed down. If you're not in the home building, you're not essential.
Right. Well, I think it's great being in a market that's strong on the employment side, still very affordable, and the price is increasing slightly and not too fast because it allows you really for a long cycle. Right. So I think it's great. I want to ask you on the stimulus package, because I think the one thing that you guys in the States or Trump did, the first one, just to open the checkbook and say, guys, take as much as you want, let's fix it. And then all the countries followed, I think. Canada followed and kind of copied. So there's 2 billion, you said 2.7, so 2 trillion, so 2.7 trillion committed. It is big numbers, and sometimes, you know, average Joe in the street doesn't know how it influences him. The landlord that owns 3 or 5 properties doesn't know how it will help him. And maybe big business doesn't really know how to take advantage of it. So how do you think, let's talk about the average Joe that will either buy or rent the communities that you're building can take advantage of this stimulus package?
Well, I think there are probably 2 things to think about. part of the stimulus package gets immediate cash to people, what I'll call emergency living capital. And then it also allows for an increase in the unemployment money that can be received from $200 a week to $800 a week. And for this market, that's tax-free. That's a big amount of capital to help them just sustain their livelihood. And it's those people we need that move in to buy goods and that rent units and help make the whole economy work. So that's, I think, a key help from the government from that perspective. And those people come back and buy houses. I mean, the people that work at restaurants make $60,000 a year. They buy houses, 2 incomes, and they've got a nice house. So it will help us. There's no question about that. And the other part is the employers have packages. So you can get up to $2.5 million in stimulus money to offset your negative of the coronavirus. And you have to have a certain number. It's a ratio of your employee cost, your obviously all the payroll benefits, things like that. And there's a ratio you can get. For us, it would probably give us 2 to 3 months of additional time from the government, and it would be forgiven as a forgiven loan, not just a repayment. And if it does turn into a loan because you missed some hurdles, it's a 0.5% interest rate. That's free money. And
wow,
that helps the employers that then employ the people. They go buy the goods and services and buy the houses and rent the apartments.
Right. Okay, that's interesting. I think we're seeing something similar in Canada here, where they're going to subsidize 75% of the employees' wages for a few months until they go bankrupt. But Canada is a rich country, so I think it can open the checkbook for a few more months to stabilize things. So these are good signs, and we all believe that there's a solution down the road. So the next topic I wanted to touch on your business, the niche that you're getting involved in. I know you have a few subdivisions that you're building, and entry-level housing, which is high 2s to high 3s, I think, in the area.
Right.
And it's a large-scale developer, and we had many meetings. You told me I have to look something that is, it's big enough, it's a value add, and it's scalable and it's repetitive. And understand that you researched this specific niche for close to 2 years before deciding to jump and do it. So can you just elaborate on the type of product, the build-for-rent communities, the advantages, the need for the product, the buyers' appetite to purchase them in the end of the road, the institutions to buy them?
Well, let's start with the concept that I began the search by getting involved in looking at building single-family houses that had an individual lot that you could buy and sell, and got really deep into the market to try to understand the I call it psychography of the renters. And I think what happened was the realization that all of the home builders in the market could suddenly become my competition. I thought, that's not such a great space to be in. You're competing with them in their own subdivisions. How am I going to beat that? And I came upon the concept of, instead of doing a build-for-rent project of building individual houses and renting them out, why don't we build little villas and put them in a higher density multifamily format? And people were doing that. And when I looked at the numbers, it made all the sense in the world. The institutions in the US that fund the money for these products branded it institutional, giving it money. It had for a while Fannie Mae money behind it, and then it pulled back for some reason. I'm not sure why. Not that that is so critical, but it just makes all the sense in the world once you understand the psychography of the premium renter and why they're in it. Effectively, a third of the people in these 11 to the acre, 150 to 220 unit projects, think of it as a single story apartment building. They have a little bit of they have a rec center, they have a concierge service, they have the pool, they have the jacuzzi, they have the barbecues, they have the Amazon drops on it, they have super high technology, super high speed, they have electronic connectivity to the house to turn the air on and off and open the door and let people in. It's incredible how high technology this is. And these renters are defined as what's called a premium renter. They don't want anyone above or below anymore. They don't want anybody next to them. They want their own little house that they rent, but it's their house. And it's lock and leave, and it's clean, and it's simple, and it isn't a commitment. About a third of the renters are millennials, and they just don't want the ownership responsibility like their parents had, and then they got foreclosed and lost everything. So I call it once bitten by snake, afraid of lizard. And they didn't want it. So at this point,
it's a good point.
Yeah, at this point too, it's where the 2/3 are probably boomers and a little older that have a choice. Most of them could go buy a house if they wanted, but not really where they want to be. And so all of the build for rent projects in my program have a walkability factor, close to restaurants, close to shopping, close to traffic corridors, and close to jobs. And conversely, a house, you might have to drive till you qualify, and you're 45 minutes away from everything. So it's a little bit different program. The closer we are to those things, I think the more attractive it becomes, and we get the premium renter. And the premium renter pays about a 25 to 30% premium to rent this particular type of product than someone in a high-rise apartment complex, which here, high-rise, call it mid-rise, 3 stories, 4 stories.
Right.
5. But it's a very deep market. The reports that we've gotten from well-established marketing firms have said that the market for the premium renter is about 10% of the number of apartment units in a given market. And that's 40 to 45,000 units here in this market before we hit a saturation point. And to date, there have been less than 6,000 built in this Phoenix market. So there's a lot of upswing. Now, granted, there are probably 24 projects or so on the drawing boards that most, I'll say, a fair share will get built, but that's still such a low number compared to what the total saturation point might be. And I see that as a very repetitive market. It has scale to it. Our program fortunately has enough of a profit structure in it that we have a buffer to ward off any changes in the market, any dips in rent, any for unknown pandemic issues. We've got an ability to withstand the changes.
Right. Yeah. Well, you said, I was with you. People on the call maybe don't know, but we met the builder that will build your communities, and he built, I think, most communities in the Arizona market so far. And I saw his board and I saw the numbers, and I was shocked to how little. I thought this market will be saturated because I met in, I think it was October or September, October. I met the CEO of Taylor Morrison, which is one of the largest home builders in the U.S. You probably know them very well. I know you're competition of them.
I have a story about that. And you mentioned earlier about us being able to build in 143 days from contract to deliver the keys. That was something the Arizona Republic, the local newspaper, came up with. And they went through all the builders that built more than 200 homes a year, I think it was, to come up with how quick they could deliver the homes. And by God, Taylor Morrison did it 2 days quicker than us. We were 141, we were 143. So I've known him for a long time.
Okay,
We're number 2.
So she said that they partner up in such with an operator, and they're building about 10,000 homes a year. And she said they opening division, and they want to take it nationwide. And she believes within a few years, this division will be as big as the home building division. So on one hand, it's great because you see such a big player getting into that market. On the flip side, we always think, okay, we small guys don't have the stamina. We don't have the cheap money that they raise in the stock market. How do you look at market like Phoenix and other markets, because you mentioned Dallas and other markets to do it? When do you start looking at saturation as being a problem with such a product?
What I have is a game plan to be able to acquire land, build the property, rent it at certain rent rates, and make a certain spread in profitability from the value at the back end. And I'd like to keep that ratio intact. When the land starts getting more expensive to buy, and if the rent rates don't increase, then my ratio will diminish, and that's the time at which I'll say it might be time to leave Phoenix. So when the margins scoot to such a small margin, like it has happened in the traditional permit units, where their profit is probably 15% of the value when they're done, here our profit's much greater. They can afford more profitability to all those involved because of that. Once that gets too short of a margin, that's when we'll move. I don't see it happening, though, before we're able to get at least a few thousand units under development and located and positioned and under development.
Okay, I guess also to that point, we drove around a lot, and you showed me from our experience what's the right and what's the wrong location for that. So I think the fact that maybe there's a lot of potential development in play doesn't mean that they will operate well, and there's still room for better ones, because I've seen in the past where people with money think that they know everything, and they start going into building those communities, right? And thinking, oh, I'll find a builder and we'll do it, and no problem. I've seen it's a little bit on retirement homes in Canada. We have a big shortage of retirement homes here, which is called independent living. And many builders say, yeah, I can build a subdivision. I'll build a community like that. And there was actually influx of retirement homes in the last 3 years, but the wrong type, because the big boys like 120 to 140, 150 units. And, if people build 85 unit, it just, the exit wasn't there. So there were a lot of properties that were maybe operating well, but kind of stuck, not here, not there, as we say. So maybe it's going to happen also in this thing, where those communities attracts a lot of big money that doesn't necessarily have, I would say, people like yourself with all the intel say, hey, this is where we should do it because of these are the 50 reasons why you should do it, not just build it and wait for people to come.
Yeah, there's a whole lot that you went over that I take to heart, one of which is the Taylor Morrison, to me, is the big lumbering cat in the jungle that nobody wants to mess with because they're so big and they're so wide. And I'm more the fast reacting, quick acting, nimble little cat that scoots around and doesn't get caught. And we'll be to the spots that they can't get to so quick because they've got a laborious process to go through and make it happen. And they are a formidable competitor, and they teamed up with a group that has done a number of deals here, but they teamed up from the perspective to take their playbook and replicate it. So the people that actually did the management of their deals here today, mainly our contractor who built for them and the main guy, they won't be running it. They'll just be making a little, I'll call it, branding fee on what they're doing. So we'll be ahead of them and a little quicker reacting on a lot of locations, but it's still, I believe, an interesting issue where anybody with a checkbook can buy a piece of property, but you need to get out. It's not how to get in, it's how to get out. And so we're probably more nimble than most at figuring that out at that point. And I think we'll stay ahead of the curve enough to make certain we get our good locations. There's a group here that's trying to sell 4 locations that they tied up and started the processing on. And there's only one that's even decent, in my opinion, that will work for this kind of a premium renter. The rest just won't work. And a lot of people I've talked to about that are just shaking their head and they think, well, they must have had a good deal in the dirt, but that won't make it. You need to have different amenitization packages. You need to have different buyer profile amenities for them to be interested in it. So it'll be interesting to see what happens. But we're not concerned about getting our market share. We really aren't. Was on a call today with the group that put us into contract on the Camelback project. and they got another one. They found one for us in Gilbert. Another competitor dropped it, and they're not sure why. And they said, it's back on the market. Do you want to make an offer on this, Larry? I go, yeah. It was literally a mile away from a master plan subdivision I did that had a golf course on it. I said, you're kidding. That came up now? Let's take it. So it's good to have a network of brokers to help me in locating the pieces that are out there and coming back and circling around and cycling in. And it gives us an advantage too, at least in this market.
Fantastic. Well, I know now from our recent conversation, you have about 1,000 units in various communities in different planning stages, and I know at least one of them we're part owner of the land together. We wanted to start in June, but I think we'll wait until everything clears. And I'm very excited. This Maricopa deal, I think, talks about the outlier that people don't know of. And we spoke about the Africa in shoes, right?
Right.
And in a market that has huge demand, there's no rental properties. What does it mean? Well, build them and they will come. That's for sure. So I know you're the first one that said we got to go in that market and do it. And well, I just saw the report that you sent me the other day that suggested that the rental rates were actually higher than what you thought initially in your underwriting process. So I guess there's some everything comes together now, and if it makes sense, it makes sense, pretty much.
Right. And this is we are creating. We're just reading, trying to be intelligent about it, and reacting to. The report from the city happened to talk about their need for housing. And I get it. I was building in Maricopa back in 2006 when Maricopa was the fastest growing city in the nation. And in part because of the homes we were building and developing. And I've been in the city for quite a long time. And I've seen the maturation of the constituency there. And it's like 38% of the households that are there have college degrees. That's a pretty good ratio. And they've got good income. Of course they need apartments. And the people that are living sharing houses because they have room and there's no other place to go, they're going to love being able to have their own little space. It's going to work really well. And you're right. We did have a June start date. I think that's getting pushed back a bit because of the pandemic. But by God, Maricopa, they had a meeting over the phone with us the other day instead of in person. And they also have now initiated to have web-based city meetings, and they'll allow people in also, but they'll limit the number to 10 people to come in. So they're progressive. They're working with it.
Well, yeah, I remember the meeting, the pre-consultation meeting that Michael actually attended, and I was all over the phone. And it's so refreshing to see cities with so much hunger and so much ideas that tell us what you need, we'll help you get it. As a developer, I'm sure it's a fun place to work with, right? A great place to work.
They are a very good city to work in. You just have to be what you wish for. You don't want them to become so entitled to telling you what to do. That happens.
Okay, well, I think we covered quite a lot of things. We spoke about the little bit pandemic. We spoke about the general market, the stimulus, and really specific about your market and your product. And I think there's a lot of value to everybody here tonight. I think let's open the tab here for all kinds of questions from people, and we'll try to answer them as they come. So I see one question: following the coronavirus crisis, what do you think will be the correction, and what will the opportunities will be in Phoenix? So other than what we're building, and I think the fact that we're building, and it's a very important part to be delivering in a year and a half to 2 years down the road, right? Because it gives the market time to correct, come back. But if an investor wants to get into the market within the next 3 to 4 months and gets their hand on something, what do you think the opportunities will be? Will it be land? Will it be hotels? What are your thoughts on that?
Well, there's always a question about looking to look for opportunities of buying notes at a discount. Maybe some assets are getting put on the block because people can't handle their mortgage payments. To me, that will happen. and the less quality product type. The A product type will come back quick. The C product type, maybe not so quick. And as far as the effect that it might have on us, you hit a nail on the head. If we continue through our process right now, we'll be finished in 2.5 years from now. So at that point, there won't be any more coronavirus. Could be something different, not this one. And the market will have rebounded nicely. So when we come to the market to rent, we shouldn't have any issues, I don't believe.
Great. Yakov is asking, what are the top 5 metrics you look at when you're evaluating cities to be developing in?
This is interesting. The top 5 metrics are Phoenix, Dallas, Austin, Denver, and I'm not sure we'll need anything else. So it got disseminated from reports we've hired to get done. And metrics are job creation. Metrics are affordability for housing. Metrics are job in-migration, people in migration, and job creation. We'd like a very progressive governmental body to assist in creating more companies to come there. So Dallas is high on that list. Austin is high. Phoenix is high. And Denver is high. Those are probably our prime locations. And they've got quality life.
So you're basically looking for the same fundamentals that you said before. We're looking for people coming in, meaning population growth, low unemployment, because employers are there. Affordability, I guess it's key, right?
Affordability is, but that's just for the employer's benefit. Our premium renter isn't thinking so much about affordability. They can afford whatever they want. They choose to be here because they want to be here. This isn't a need to buy an entry-level house because you've got 2 more babies and I need a place to put them. No, this premium renter wants to be in a good location. So, but the affordability does come to play to bring more employers in to create more jobs. That creates more synergy.
Got it. Michael, do you see any other questions? I see a lot of people like tapping. I don't see any. Oh, okay.
Yeah, the tapping's slow.
Okay.
So there is. Okay, there's more.
Yeah, I see. Sean, is your experience, how will the banks respond to the market crisis, and what will the effect on lending and financing be?
Well, it's been most financing is blacklisting hotels, apartments, senior living, student housing, and I see that as a short term. They don't really understand. I was told of a meeting that one of the lenders we're dealing with the other day had with the loan committee, and they were hemming and hawing about giving the final approval to give a loan for a construction project. And finally, one of the senior people in the meeting said, "Guys, what are we thinking about? We're not leasing or not lending on a building that's to be leased up today or a hotel that's in action today. It's going to take them 2 years to build this. Let's make the loan." And they said, "You're right." They made the loan. So there's that to think about. I think it's important to realize that this temporary situation is a temporary situation, and we'll figure it out. It's getting figured out. There's a delay. Sorry. Go ahead.
No, just to continue what you said, I think that all the big lenders are not going to make any decision within the next, as we said, 90 to 120 days, because they already pushed for Class A product, right? So you can't pay now, don't worry. You're right with the Class C. So I think there's going to be a problem there, because the banks say, my God, you lost 40% of your tenants. You're not going to get them so fast, because a lot of them lost their jobs, and there might be opportunities in that. So I think segmenting the market is very important. Okay. Another question is about the rents. What do you think? And I guess it's residential rent. Do you see any immediate impact on residential rent, other than not being able to pay?
Well, we have to put a strata on the different product types. For the Class A apartments, I think there will be a correction across the board, but for the most part, the big hits will happen in the C and the B class apartments because those people will be in default. They'll have to deal with evictions, they'll have to deal with issues like that, and there'll be more movement. So the quicker we can get those people back to working so they can then start paying the rents again, that'll help a lot. For our premium renter profile that we're dealing with, it isn't so much that. Most of them are, as I say, high income, they're high credit, and they're stable. A big portion of our renter are retirees with a lot of money in the bank, so they won't be as affected. So on across the board, I think there will be some compression for rents, and at the top end, I don't think there will be so much.
Got you. Okay. There's a question about the build for rent communities. Ian, please, shorter question or two questions. At what point during the development phase do you start marketing to institutional buyers? Do you have a few buyers that you like to work with best? And what time frame do they look to know the project is profitable and they feel comfortable buying? Basically, are you starting to market before you finish construction? After you finish construction, start marketing 3 or 4 or 6 months after it's stabilized and they can see flow of income at 95, 98%? That's pretty much it, I think, the question.
It's that we have current information. There's a group called Newmark that just took the assignment of selling a package of 5 projects by Christopher Todd Group, the #1 group here in the Valley next to Next Metro. And they just closed on 3 of the properties of the 5. And they started marketing after they were stabilized. They went out to the market with a package where you had to sign a non-disclosure agreement, and they got over 400 responses from buyers for that package. I thought it was 3, but I talked to the broker, Trevor Koskovic, and it was over 400. And
how big was the package? Dollar wise?
Let's see, about $275 million.
Wow. So 400. Wow.
And of course, some of them just wanted to glean the information. They weren't real buyers, but even if 25%, then you still have 300 NDAs that went out. And he said that the most he's ever had on any other product, and he does a lot of multifamily product, and he's the nationwide president of that division, he said was about 100. He said it was 4 times what he had on normal product. Out of those 400 NDAs, over 100 toured the site, which is incredible. And they ended up closing on 3. The other 2 are under construction. We went by the one on 99th Avenue that Hancock was building.
Yeah.
For Christopher Todd. The key is the next 2 will close at 90% occupancy. So to answer the question, when do you start? It depends on your profile. Are you trying to do a package? Because in all reality, all units wouldn't be completed at the same time in a package. It just doesn't happen that way. So if you had a single product, I would say that you start packaging your project with a good group like the Northmark, probably 3 months before you're finished with your last phase, and it takes them a month to put the package together, and it ships out a month or a month and a half after you're finished with your last phase. Then you're fully full and stabilized. At that point, you've got packages coming back and forth. They tour the site, and if you choose, you could close it relatively shortly after that. And that's my preference for the first few we do. We'll build them up, get them stabilized, and immediately sell them.
Right, and the stabilization is pretty fast. From the few times that I saw communities, they're doing them, if I recall, in chunks of 40, and they're renting them within a month or so, right?
Right, and that goes back to the last part of the question. Because we're building in 40-unit pods, so while we're building the entire project, pieces are getting leased up. So we're getting income before we're finished. Other than like a 3-story apartment, you got to finish the whole building, and then you can go rent out unit number 1. In this case, we're renting as we go. And literally 30 to 45 days after we're finished with the last pod, we're fully stabilized. So we're marketing that before that happens, so that when they come to the point where, well, let's see what your income is today. What's your rent roll today? Oh, we're full. Okay, we can close. So that's how we'll do it. And they know your rent rates, the buyers. They know your expenses because of the history that you have for this product now. And it's not that hard.
Got you. We have one more question from Mario. I'm not sure if it's specific or general. It's like, what are you concerned about right now? So let's put the coronavirus aside. I guess it's influx. Again, I don't know, Mario, if you have any specific things that you want to ask about. I think we spoke about all the potential risks in the market, unemployment. I'll jump to the next one until Mario reacts.
How soon will it get rectified? And the sooner, obviously, the quicker and more decisive the solution, then things will get back on track and get back to normal. It's not really, I have no concerns about the market, the product type. This is a tsunami that's hitting the entire United States. This comment that Shannon made from Taylor Morrison, it wasn't a light comment. This will be a very big part of their business because it's a tsunami happening to the American people. And I think it will carry over to other markets also, but it's a pretty good sized market here. If you took 10% of all the apartments in the United States and claimed those to be premium renters, you've got one really big opportunity. It's a tsunami. Right.
Okay. There's a question about negotiations approach with non-paying tenants, and that's by Dennis. So I will talk about what's happening here with the market, and maybe you can share what's happening in the U.S. In Ontario, per se, the premier said that no tenant will lose their house because of the coronavirus effect. So basically, you cannot evict non-paying tenants. Now, the eviction process is totally different than your process in Arizona. I think you just shoot people and that's it, right? or aim at them first and let them pack 5 minutes and then shoot.
We wrote the tenants
Here it's a process. You have to go to the board, et cetera. But now we said freeze on evictions. I just did a webinar last week, and we said, be proactive and talk to your pet tenant before April 1st, and try to work with them. And I got a feedback from one of the ladies that was on a call. He said, what, following this, I called my tenant and I did a plan with them, and they said they will pay, and she offered them some services because she does tax returns. So she said she's going to do the tax return for free if they pay on time, and blah blah blah. So working with your tenants, I think is very, very important. Now, if they don't pay you, serve them the documents. Although you cannot take action and evict them, at least because unfortunately, many people lost their jobs and can't pay. But some people take advantage of other people losing their job and are not paying because they choose not to pay. So you want to be ready to take action if you need to. So when they reopen the court system, say, listen, consistently, I gave them notice, I did what I need to do as a landlord, and now I can start the process. But I think try to work with them, give them abatement on a one-on-one basis, do some payment plan. So be proactive on that. Another question, as a developer, do you always build the project to sell? If so, why? What do you personally? Okay, it's a cash flow question. So basically, if your business is a community builder and seller, or you're gonna keep a community or two or other source of cash flow for real cash flow?
Well, to begin, the game plan is to sell. I'd like to have the track record of completing a project completely from A to Z. And be able to check the box that we've done all the way through, including selling the asset. Once you have that established reputation, there's a lot more capital that want to come to you because you've done and proven you know how to do A to Z. Some people don't know how to sell because they just aren't good sellers. And you can have an attitude that you'll never sell. You'd like the cash flow forever. For us, to begin with, I'd like to sell the first 4 to 6 projects. And then after that, we stand back and think about what we'd like to do. Maybe after that, we do keep and refinance out the capital and keep the cash flow. So our knees are flexed for that. At the time, we'll make a decision. For now, it's sell the first handful.
Perfect. Guys, any other question? I see Ian is typing one. So let's take 1 or 2 more questions. And if there's other question, feel free to connect with us later, either by email, on the phone, and we'll get the answers. I see 2 more. Okay, so see who will type faster, Yaakov. And the winner is how? Okay.
This
how
is a
does
good question. See these.
Oh, can you read?
Level of development that you jump to?
Yes.
It was effectively an overnight success that took 20 years.
Yeah, I always get back to that book, The Outlier, by Malcolm Gladwell.
Yeah,
it's exactly that.
It wasn't a goal to do what we did. I didn't have a goal with a certain amount that I had to hit to, and I don't have that now for what we're doing. The goal was I want everyone to really enjoy what they do on the team. When people enjoy what they're doing, they do it well. And I want to make certain that we're very efficient and that we're not missing things because of the amount of progress we have. So when we were doing 36 different 45-foot wide, 55-foot wide subdivisions, and we were building it 143 days to get this out, we were efficient, it was military, it was fun, and I developed this concept with my people. I said, what we're doing, guys, is like militaristic monopoly. Militaristic because if you don't execute, you die. Monopoly because it's a lot of fun. We need to have fun doing this and enjoy it a lot. And that's our program, that's our philosophy. So we'll do as much of this as we can as long as we do it really well, very efficient, and very profitable. So that's kind of the thought process there.
Perfect. Well, I think, people can ask, but I think we answered the main question. And first, I want to thank everybody that joined us tonight, took the time off your Netflix and really getting time to educate yourself. Larry, thank you so much for taking this over an hour here and sharing your world with us, the good, the bad, and ugly. And, we're all optimistic that, coronavirus is here, it's going to go, and the market's going to get back to where it is. And luckily for you and luckily for us, the market was strong before, and it will continue to be strong. And we see many, many years of doing great business together successfully. And as you said, let's have fun in the process.
Absolutely. Thanks, everyone.
Okay, yeah, just a second. I just want to bring the last screen. Whoever wants to maybe submit additional questions, let me just put the last slide with the contact information. So here's how you can reach us. There's web, email, my phone number. We've got the Facebook page. And if anyone wants to join the Investors Inner Circle community, there's a Facebook page to that. Just ask to join the group, and we'll let you in. Thank you so much, everyone. I think it was an amazing call. Learned so much. And we'll talk again. We'll let you know when the next webinar will take place. Larry, thank you so much.
Good, guys. Thank you. Good talking. Thanks for having me on.
Soon.
Bye-bye.
Bye-bye. Have a nice evening, everybody.
Thanks. Bye-bye.
Bye.